Jeremy, how will the administration's proposals to regulate stablecoins impact Circle?
Well, I think there are a number of different pieces here. I think, and there are a number of different recommendations, and obviously it remains to be seen how those recommendations translate to actual policy, making their way through Congress. There's a lot there, but I would say at the highest level, the proposal that dollar stablecoin issuers in the U.S. financial system should be regulated as banks at the federal level by the Federal Reserve is something that we think represents significant progress in the growth of this industry. And in fact, several months ago, we had announced that we were preparing an application to file to become one of the first national digital currency banks in the United States. And I think what it represents is, in some ways, acknowledgement that dollar digital currencies like USDC are growing rapidly. I think as expressed in the report itself, there's a real recognition that as these payment stablecoins grow, they could grow at internet scale relatively quickly. And so when you have something like that happen, when you could get into the hundreds of billions in circulation and trillions in transactions, the risks that could present to financial markets, financial stability, the real economy, and interaction with it become much more significant. And we kind of go from the sort of fintech money transmission type of regulations that have really applied to things like USDC to date and other technologies in payments like PayPal, and really upgrading this to a much more fundamental infrastructure at the core of what potentially the future of banking and payments and capital markets looks like. So I think overall, we're supportive of that recommendation.
Jeremy, you mentioned Circle's intent to apply for a national bank charter. Have you moved forward in applying for that? What are the regulators telling you about the approval process, how long that could take, and would you be FDIC insured?
So a few things there. We have not formally furnished our application at this time. What I can say is we've certainly had a lot of engagement with regulators. And I think following this PWG report, that actually kind of strengthens the approach that I think we've been taking. And we have expressed that we intend to file for FDIC insurance. As maybe some have noted, the FDIC itself has been conducting a study around what would be a potentially appropriate form of FDIC insurance for a full reserve stablecoin. Remember, a fully reserved stablecoin is not lending out the reserves like a bank lends out your deposits, which is the fractional reserve model, which is why we have FDIC insurance in the first place, because there's more money outstanding than there's actual deposits, and that creates a risk that everyone has a run on the bank. And so there's an insurance product to deal with that. So I think what that insurance looks like is something that will have to be worked through. And I think this ties as well to your other part of your question, which is, we expect this to be a process that we work kind of hand in hand with regulators on this. But at the same time, really, I think what we've seen from the federal regulators is really a call to Congress to do the work to define the statutes that really are specific to this industry, because this isn't the same as traditional money and traditional banking payments. It's a new thing. It's internet native money and blockchain native finance. And so the kind of details on a charter might need to get worked out over time with both the agency side of the house and the congressional side of the house.